This video is sponsored by RayLandCapital.com. Looking for simple process, easy to get small business loans? Visit RayLandCapital.com funding to apply today. They are small business friendly loans partners. Now let's get back to the video.
Greetings investors and welcome to a comprehensive guide on investing in ESG funds on our YouTube channel. If you're keen on aligning your investments with your values and contributing to a sustainable future, you've come to the right place. In this video, we'll explore 10 key points to consider when investing in ESG funds, providing you with detailed insights to make informed decisions in the realm of socially responsible investing. ESG, standing for Environmental, Social, and Governance, has become a significant focus for conscientious investors worldwide. Let's embark on this enlightening journey into the world of ethical investing. Point 1. Understanding ESG criteria. Our first point delves into understanding ESG criteria. ESG funds evaluate companies based on environmental impact, social responsibility, and governance practices. Environmental factors assess a company's ecological footprint and sustainability initiatives. Social criteria examine the company's relationships with employees, customers, and communities. Governance evaluates a company's leadership, ethics, and transparency. To excel in this point, research ESG rating agencies like MSCI and Sustainalytics. Understand their methodologies for evaluating companies based on ESG criteria. Familiarity with these standards will guide your investment choices. Now on to point number 2. Point 2. ESG integration in investment decisions. ESG integration is a crucial point in investing responsibly. ESG funds integrate environmental, social, and governance factors into their investment decision-making process. This integration ensures that companies with strong ESG performance are prioritized in the investment portfolio. To grasp this point, research ESG funds that explicitly state their integration approach. Look for funds that transparently disclose how they incorporate ESG factors into their investment decisions. Clear integration strategies are indicative of a fund's commitment to responsible investing. Moving on to our next point. Point 3. Active engagement and proxy voting. Active engagement and proxy voting are impactful points in ESG investing. ESG funds engage with companies to encourage sustainable practices. They use shareholder voting power to influence corporate decisions. Active participation holds companies accountable for their ESG performance. To succeed in this point, explore ESG funds that publish their engagement activities and proxy voting records. Transparent communication about their efforts demonstrates a proactive approach to advocating for positive change within companies. Now, let's delve into point number 4. Point 4. Diversification and risk management. Diversification and risk management are fundamental points in ESG fund investments. Diversifying across sectors and regions mitigates risks associated with specific industries or regions. ESG funds often prioritize companies with sustainable practices, reducing exposure to businesses with potential environmental or social controversies. To understand this point, review the fund's holdings and diversification strategy. A well-diversified portfolio enhances stability and reduces the impact of market fluctuations on your investments. On to our 5th point. Point 5. Performance analysis and long-term outlook. Performance analysis and a long-term outlook are insightful points for ESG investments. Evaluate the historical performance of ESG funds and compare them with conventional counterparts. Additionally, assess the fund's long-term sustainability goals and how they align with your investment objectives. To excel in this point, utilize financial websites and ESG-specific databases to compare the performance of ESG funds. Consider the fund's track record during various market conditions to gauge its resilience. And now, on to point number 6. Point 6. Transparency and reporting. Transparency and reporting are key points in responsible investing. ESG funds should provide transparent information about their holdings, strategies, and impact metrics. Regular reporting on ESG performance allows investors to assess the fund's effectiveness in promoting sustainability. To grasp this point, review the fund's prospectus, annual reports, and sustainability reports. Transparent communication indicates the fund's commitment to accountability and investor trust. Now, let's move on to point number 7. Point 7. ESG ratings and data sources. ESG ratings and data sources are informative points for investors. ESG funds rely on ratings provided by specialized agencies to assess companies. Familiarize yourself with these ratings, such as MSCI ESG ratings or Dow Jones Sustainability Index, and understand their methodologies to succeed in this point. Explore these rating agencies' websites to comprehend how they evaluate companies. Additionally, consider subscribing to ESG databases that provide detailed information on companies' ESG performance. Moving on to point number 8. Point 8. ESG sector focus. ESG sector focus is a strategic point in responsible investing. Different ESG funds may prioritize specific sectors, such as clean energy, healthcare, or technology. Align your investment with sectors that resonate with your values and beliefs. To understand this point, research ESG funds with a sector-specific focus. Evaluate their investments in companies contributing positively to the chosen sector. Investing in sectors aligned with your values enhances the impact of your ESG investments. Now let's explore point number 9. Point 9. ESG ETFs versus mutual funds. Choosing between ESG ETFs and mutual funds is a significant point for investors. ESG ETFs, exchange-traded funds, and mutual funds offer different structures. ETFs trade on stock exchanges like individual stocks, offering liquidity and typically lower expense ratios. Mutual funds, on the other hand, are actively managed and may have higher fees. To excel in this point, assess your liquidity needs, risk tolerance, and preference for active or passive management. Select the fund type that aligns with your investment goals and comfort level. Finally, our last point. Point 10. Personal values and ESG alignment. Personal values and ESG alignment are paramount points in responsible investing. Reflect on your values, priorities, and the causes that matter most to you. Choose ESG funds that align with your values, ensuring your investments reflect your commitment to a sustainable future. To succeed in this point, engage in self-reflection and research ESG funds that resonate with your values. Prioritize investments that align with your ethical and social considerations. Outro. And there you have it, 10 key points to guide you in investing in ESG funds. As you embark on your journey toward responsible investing, remember that ESG investing offers not only financial returns, but also the satisfaction of contributing to a better world. If you found this video informative, please give it a thumbs up, subscribe for more insightful content, and hit the notification bell to stay updated on your path to ethical and sustainable investing. Thank you for joining us today, and may your ESG investments make a positive impact on both your portfolio and the planet.